All right, what's up, YouTube? This is Teddy SFT, and today we're going to talk about break even. Okay, do you guys move your stop losses to break even at some point during your trading, or do you let it ride until either take profit or hit stop loss? That's what we're going to discuss today. And the reason we're going to discuss that is because yesterday I traded and it took one trade for the day. The price action was just not what I like to see, and I took a break even trade and I walked away from the charts. And I'm okay with that. I'm okay with the break even day. That's better than taking a loss. So I like to go break even. Once I get a retest of my entry, typically I'll move to a break even, and I'm going to go through that with you and show you kind of how I do it. But essentially, I believe in break evens because it's preservation of capital, right? So the name of the game in trading is you want to preserve your capital. You don't want to give up your drawdown, right? So essentially, if you're trading a 50K account and you have a $2,500 drawdown, you don't want to give that up because once you do, you blow your account. You quote unquote blow your account, right? And obviously, if you're live trading, you don't want to give up too much of your capital because it's your own capital that you're losing, right? You're losing your own cash. So you want to preserve your capital at all costs. And if the price action is not doing what you want it to do and it's not doing what you typically like to see, it's okay to walk away. That is one of the things that a lot of guys I feel like don't talk about on YouTube. You're not going to get a perfect setup every day. It's just not going to happen. Yeah, you'll have some outsized days where you're making, a ton of money, but that comes with sometimes losses and also comes with sometimes where there's just literally no setups at work for the time period that you're trying to trade. Now, a perfect setup came for me, but it was after I walked away from the charts and I had other obligations for the day, so I couldn't trade. And I don't typically like to sit in front of the charts all day either. Now, if I have nothing going on that day, I have appointments in the afternoon, no meetings, whatever, I will sometimes I will trade the afternoon session. If I don't have a good morning session, I'll try to see if there's any setups that form in the afternoon. But typically I trade between like 8:30 to noon, and sometimes I'll push it till 1 o'clock, 1:30. But typically it's 8:30 to noon is kind of the time period that I like to trade. And then again, sometimes I'll come back in the afternoon. Yesterday, I just couldn't. I had other obligations. I could not come back in the afternoon, and I missed the perfect setup that I definitely would have taken. It was literally the perfect setup for me, and I'm going to show you exactly what that looks like. So you can see here, basically here's our break-even trade, $1.38 in profit is what we made. So if we open this up here on TradeZilla, you'll see kind of the trade that we took. And I'm going to show you this in TradingView because I want to show you some of the levels that I had marked off. But essentially, you can see this is where I took a short. I took a short here off of this candle here. This is 1057 was my signal candle. It was a bearish engulfing candle, and I'll explain kind of what I saw here. Okay, so coming into this day, we'll look on a 15-minute chart, kind of see what we saw coming into the day. So we had this gap in the beginning of the week. This was on Sunday night, the open, so I marked out that gap. This is the previous day. So this is Monday's price action. We had an area of interest, the key level that I like to mark off, some liquidity that's sitting up here. And, obviously we have some liquidity down here, but I marked this area here. And as you can see, overnight, we kind of consolidated, but we're also kind of trading up, bullish market structure, higher highs, higher lows. And then right into the open, we kind of traded up, right? So we had this bullish engulfing candle and price just traded up on a 15-minute chart. And as you can see here, we had a 15-minute basically hammer down candle. Now it is blue. I don't typically like a blue hammer down. I'd like to see that to be red, but it's okay. It's a blue hammer down candle. That's a weak candle. Looks like it could be a potential reversal candle on a 15-minute. So that was at 10 a.m. And then we come into a 3-minute chart and we'll see exactly what I saw here. So we came up to this level, that key level. We cleared out the liquidity there and price sold off pretty hard. Now, it didn't give me a lower high setup. That's what I typically like to see as a reversal if I'm going to take a reversal. So we had, bullish market structure going into the open. We had this little fake out move. And then we came back up to clear liquidity, even additional liquidity that was up in this area here. Right after that, you had this bearish engulfing. Now, I didn't take this short because, again, I don't like to take a reversal short without having a lower high. That's just one of my rules. But because this was already a fake out move here, most likely that this second move was probably not going to be a fake out move, but I still didn't feel confident taking this short. If I did, it obviously would have played out. That was a nice short there for a 2-to-1 risk reward that would have definitely hit. So I just kind of sat and watched price a little bit. Okay. I watched price kind of just do its thing. We had another bearish engulfing here, but it's towards the bottom of the move. I didn't take that. I kind of just sat back and watched. I watched price come up. Now what I was starting to look for a lower high that was going to form, right? That's, again, one of my rules before I'm going to get into a short. I want to see retracement, a lower high get formed, and then either bearish engulfing or a bearish hammer down. Those are my two signals that I really like to look for. So we had a retracement here. This candle printed. This was on 1045, but it was like a hammer up candle off of the money line, right? So that's not really a bearish candle in my opinion. And price just went sideways from this point. But I was thinking, okay, we're going to now come up and we're going to create another lower high. And then what do we get here? We got a bearish engulfing candle right here on 1057. So I took the short off the close, and right away price started to go against me. And I had my stop loss up here on the high. And of course, I'm not confident with this entry, because when price goes against you almost automatically, that's never really a good sign. So now I'm like, all right, I got to get out of this trade, break even if I can. And that's exactly what I did. So price kind of traded, it started to go in my favor. And as you can see, I mean, it literally just went in my favor a little bit, and I went to break even right away. And that's, again, what I like to see is I want to see market go my direction almost instantly. So if you see this move here, let's just say I did take a bearish engulfing candle here, stop loss above the body, let's say, because it's a bigger candle. You see how quickly price, I mean, yes, it traded up, but then it got rejected hard almost right away and traded all the way down on the next 3-minute candle. That's what you really want to see, and you want to see, what I typically would do in this situation is, okay, you had price trade it down, trade it back up into against you, right? Your entry is at the green line. So that's like your retest of your entry. And then as soon as it trades back down is when I would go break even on my stop loss there. That's typically what I like to see on a 3-minute candle. What you'll see price come down, and then it'll trade back up. It looks like it's going to reverse. It'll basically do a retest of your entry, and then it'll trade back down. And then when it does that, after that retest is when I go break even. But you really want to see that happen quickly on that first 3-minute candle. So when you get a blue candle like this is a bullish candle, almost a bullish engulfing candle. And the very next candle, that is not a good sign. That's a sign that my entry was not good. Now, it definitely was risky taking a short into the money line. That is, a very risky play, but whatever, I took it. It wasn't a great entry. I went to break even, and it worked in my favor that I went out break even, because it would have got me out. A better setup, obviously, was this one right here, which I was very close to taking, but I hesitated because I just saw price was just basically consolidating. So I didn't love this setup here. But as you can see here, if we take this off, you basically had what is what I call internal liquidity, right? So you had this high here that was created, and you had price. Now we have all these equal highs up in here, and you had price come out, and now it took all these stop losses up in here. That's your internal liquidity. Yeah, it didn't come for this high, but it came for this high. It came for all these equal highs, and it basically got rejected. Okay, bearish engulfing. Now, if I would have not hesitated, I mean, I was very close on taking this setup, and as you can see right away, same kind of thing. It traded against me, but got rejected pretty hard on the very next candle, and it traded down to a 2-to-1 risk to reward almost within 2 candles. That's an ideal setup, just like over here, how quickly it happened. So that's really what you want to see. I did not take that setup, and I obviously regretted it instantly, because it had everything that I usually look for, which is liquidity sweep, bearish engulfing, and it moved in my direction very quickly. So I didn't take that, and then that was it. I was done for the day, because as you can see here, I mean, if we go back to a 15-minute chart, you'll see, I mean, this price action is just completely range bound, right? I mean, this is, not ideal price action to be trading with the type of trading that I do, as I'm just not a range bound trader. And as you can see here, I mean, we're basically what's called barcoding, right? I mean, it looks like a barcode. You basically price is going up and down, up and down, up and down, up and down. It's just chop city, and it's taking every stop losses, and it's not really doing, what you really typically want to see for good setups. But if you come back into a 3-minute, I'll show you the perfect setup, which I didn't take because obviously I was not in front of the charts. But you have price coming up here. So you created this high. We traded up, took the liquidity, traded down, try to come for this low. This low, we didn't take it, trade it back up off of the money line. Bullish engulfing candle here. And the bullish engulfing candle didn't get a follow-through candle, which typically you want to see. If this thing is going to come and take these highs, you'd really want to see a follow-through candle here. And we didn't get that. We got a rejection here. So this move to me was pretty weak. If I was watching this move, this is kind of a weak move. We had a bearish hammer down candle here that did not play. If you would have taken that, which again, I probably, especially after yesterday's loss or 2 days ago on Monday loss, I wouldn't have taken this move here because you had a very bullish move here. This is almost like a bull flag, right? You're almost creating a bull flag here. So taking this would have been risky. And exactly what happened, it traded up, it took the liquidity from there, and then it started to roll over. So you got the first rollover, you got a retracement, and then you had this massive bearish engulfing candle. And if you would have taken that at the close, stop loss above the high of that candle, within 2 3-minute candles, you are getting a 2-to-1 risk to reward. So that would have been a perfect setup, but that was at 12:48, and I just wasn't in front of my computer. I had other obligations, so I couldn't take that setup. But that would have been a perfect setup to take, and I would have been done for the day. But that's it. So that's my take on break evens. Why I go break even is to preserve capital once again. And the method that I follow, like I said, is once I get in, if you're not getting a rejection right away, like right here, obviously now I'm in survival mode, right? Because I'm waiting for this to kind of play out, and I want it to go back into my favor so I could go break even. But typically, what happens is you'll get the candle will go in your favor. It'll trade up against you a little bit, but then it quickly goes the other direction, and that's when you want to go to break even. And that's pretty much the process that I follow for break evens. And that's it. Let's see how today goes. Hopefully we'll get some profit on the board, and we'll get these counts starting to trade up so we can get to our profit target.